there, hope the summer is treating you well. I'm Disha Sanghvi, and on this episode of Insuring India, we'll touch upon a rather sensitive topic. Would you be surprised if I said life insurance penetration in India is about 3% and non-life is just at about 1%? Well, it is true. As a nation, we are highly underinsured, and one of the main reasons for this is the fact that most Indians just don't like insurance. I know that's a very bold statement to make, but think about it. How often have you ignored the thought of buying insurance or consulting an expert to understand how insurance works? When was the last time you avoided buying insurance because you thought, Arey, nothing will go wrong, I'm so fit, I'll be absolutely fine. On this episode, I have with me Shweta Jain, a certified financial planner and the founder and CEO of Investography. She has over 16 years of experience across financial planning and research. She regularly conducts workshops for corporates such as Google, Accenture and JP Morgan. She has also conducted sessions on behalf of the Securities Exchange Board of India. You may have read Shweta's articles in publications such as Mint and Economic Times and seen her on news channels such as ET Now and Zee Business. Hi Shweta, welcome to Insuring India. How are you doing today?
Hi Disha, I'm good. Thank you for having me here.
I've been looking forward to this conversation simply because you constantly meet people who come to you for personal finance advice. So tell us, how often do you sense hesitation when you talk to people about insurance?
Almost 100% of the time would be my answer. But I think it's not as simple as that, because everybody is hesitant for a different reason. Some don't want to talk about their inevitable mortality. Right. Some don't want to sort of talk about this in front of family or think about what happens to the family in case something happens to them, the effect of that. And some, I think, are just scared that if they talk about something like this, it's going to happen. Right. So if they prepare for it, it's going to happen, and they actually believe that, and they would tell me stories that, there have been people who haven't taken insurance and nothing has happened, and people who've taken insurance and, something has happened, whether it's even them and they've taken some health insurance and they've fallen sick or met with an accident immediately after. So some of these times logic doesn't sort of work, but then we obviously have to talk about how some of these things will impact them, and a lot of other things sort of work in these cases. But most of the times it's, different reasons and their personal experiences that come into play when we talk about insurance. And insurance is a little uncomfortable subject, right? It's like that, the airbags. That, you need the airbags, but you feel that if you put the airbags, something is going to happen. So it's like that. But that doesn't mean that you won't put the airbags. In fact, if anything, we look for safer cars now. So it's also like the seat belt in that case. Right? Saying you protect yourself. So airbags are when things go wrong, and seat belts are to protect you. That it doesn't even come to that, right? So, but I think COVID has changed a lot of that, because people have seen close ones die, close ones suffer because of the death of somebody. And how when things are not in place because of one's fears, how it sort of paralyzes the family. So I think that has changed. So I think it's easier to sell investment product than an insurance product for the simple reason that investment you're looking at positive, future. And insurance you're looking at like a what if that happens scenario. But as a financial planner, I think both are equally important, and that's what we try and convey.
Absolutely. I think in some ways insurance is looked at as a discretionary spend and not really a need. But Shweta, general insurance penetration, which also includes health insurance, is extremely low in India compared to other Asian countries such as China, Malaysia and Thailand. Tell us about what you think are the top causes for this.
So I think in India, traditionally it has been that, we've been a country where social support has been quite a lot, at least in the past, and that is changing. So as a society, we are changing, and I think it'll take some time for us to catch up to that in the investment and the financial sort of scenario. We used to be, joint families, and one would take care of another and all of that. That is changing now. It's sort of each one on their own, right? So that is changing, and I think it takes time to accept something like that and then remedy that. I think it's still in the sort of accepted stage, where we see, people living alone, being single by choice, parents living here, children abroad, and a lot of those scenarios. So a lot of those services, I think, in India has to sort of come of age, so to speak, and that is also true for insurance, because we still are in that zone where we're expecting, say, family to take care. And a lot of times that I speak to young mothers, friends, and they are living in nuclear families. But when I talk about children's education and how we are planning for our child and what they would do, though they're living in nuclear families, they tell me, Shweta, this one, grandparents will take care. Their future education, grandparents will take care, or marriage, grandparents will take care. And I am, for one, shocked, and I cannot, there's nothing that I can say to change that, right? Because they're like, grandparents have told us that we'll take care of this. So I can just share something that happened recently, and there's a friend who would always tell me that, the future education of her child would be taken care of the grandparents, while they do live in a nuclear setup, and the grandparents live in a second-tier city. So they've told me that like for almost 10 years now, and suddenly the grandparents have moved with the couple, and they've come and told them that they're under a lot of debt, to the extent that they would want to sell off the house that that my friend lives in. So it has been a total and utter shock for my friend, because she was obviously not aware of any of these family dynamics that were happening, right? Of course, the husband was a little more aware, but he wouldn't let on, because obviously I think shame also was there. But he wouldn't tell anything. And now when I asked her, okay, but you had said that grandparents would take care of this. So does she have some FD in place for her, or like what is there? Can you? And she was almost in tears and said, no, we have to now start planning for that. It's so sad and it's so scary, because like I said, we are in that I think zone where you're trying to accept that okay, we might be on our own, but we're not ready to accept it yet. So insurance becomes a very touchy subject in some of these times, because you want to think that there are people that you can depend on, and there is the rest of the family that's really demotivating you or urging you not to sort of be independent in some of these cases, and say, what, we are there, why are you worrying, don't you trust us, kind of a thing, which then it becomes even more difficult to handle a situation like that, right?
This brings me to my next question, Shweta. Time and again we've seen that there is a lack of trust in insurers. There is a perception that insurers don't settle claims. However, in a lot of cases, policyholders don't read the terms and conditions carefully, which could eventually lead to rejection of claims. In your view, what are the possible solutions to dealing with this problem?
Okay, so a couple of things that we do is definitely look at the claim settlement ratio. What we also do is emphasize on how important it is to disclose information honestly, and not just that, to disclose all information relating to something. Like if there is an issue, like give reports, even if it means that they have to do additional tests, even if it means that their premium might be higher than normal, even if it means their policy gets rejected. At least they know what they're dealing with, right?
Exactly.
So we sort of emphasize a lot on that. And in fact, I'll tell you of a case that had happened about 3.5 years ago with us, where a client actually got rejected. The policy got rejected because of obesity, slightly higher BP, some other condition, and high sugar. So basically all of these combined, and the client was rejected covered. And she was very, very upset. She's like, the doctor's talking to me like I am at the brink of death, and they're refusing cover to me. She was like really upset. And after a lot of conversations, and we said, okay, this is what you do. She started seeing, consulting nutritionist, etc., etc. So we said, let's give it some time. So after 4 years, let's go back and do this. She said, so once she had sort of calmed down, accepted and all of that, so she was like, okay, this was a big eye opener for me. because otherwise I would have never taken all of these conditions so seriously.
Right.
So today, of course, she's in much better health. We still haven't been able to convince her to do that insurance again, because I think partly she's just scared that she may be rejected again. But I think we'll get there. So this is just one example of how, even not taking insurance has actually helped her so much. And she is actually quite grateful. I think she's just not taking insurance because she's scared, but she's actually quite grateful because this gave her the sort of eye-opener reality check, sort of punch in the face that she needed to just get her life on track. So this has actually been very helpful for her. And we've actually spoken about this to clients to tell them how they might think that they are fine, but when they disclose some of these information which they think irrelevant, they will know what it is. Because see, the last thing that anybody wants is that the claim gets rejected after their death, right? But if they are not going to share the correct information, it is going to happen, and they have to sort of the family has to live with that. So it's really, really important. And of course, choosing the right insurance partners is very, very important.
Absolutely, I couldn't agree more. But Shweta, it would be interesting if you could tell us the top concerns that people have when it comes to buying insurance. Are there any common excuses that people come up with?
So the top rejection for me would be, I don't need it. I am in terrific health, so I am not going to die anytime soon. I'm there for my family. I exercise regularly. I don't need it. So all of them are about their health. But I think after COVID, that has changed a lot, because we see a lot of news articles where we see really healthy people running marathons, dying unusually early in life. So I think that has sort of somewhere it's sinking in that, it's something that is out of my control. I've even had somebody who tells me that I drive my car very safely, so I don't need insurance. Like, I'm very safe in all aspects of my life. So the only thing that I sort of have is, what if somebody hits you from behind, right, in your car?
Right.
So that is not something that you can control. Somebody even told me that I don't drive in the rain. This guy was saying I don't drive in the rain, I don't drive at night. I know all of these things when I was talking to him about an accident, saying, okay, if you eat healthy, all of that is in control, but what happens, when you drive or when you're traveling?
Right.
So I, in fact, told somebody, what happens if you're in a plane and there's a crash? So he actually cited numbers to me saying, this is the percentage of a plane crash and this is car motor crash numbers. So he's like, far less likely. So people come with all sorts of rationalizations not to take it. At the end of the day, for somebody like that, I just talk about the cost-benefit ratio. Right. So I just say, this is just going to cost X amount, which in your overall sort of wealth is nothing. So why wouldn't you give your family peace of mind that, hey, you have a cover of 5 crores today, and this is, what it costs, at least they'll be in peace of mind. While you do whatever it is that you continue to do, you continue to drive safe, you continue to eat healthy. But this is just a cost-benefit analysis for you. And it's a term policy. So if tomorrow you win a lottery, you can discontinue it. There's nothing sort of binding you to it. But till you win that lottery, you need it.
Right. And what about health insurance?
Oh, after COVID, I don't need to really convince anybody about health insurance.
Oh, that's
people come to us and ask for top-ups now, saying, okay, I need to increase this. This isn't enough. A lot of corporate employees who otherwise were not looking at topping up are looking at also topping up. So after COVID, health insurance really, we don't really have to go convincing. They come to us. The only thing we have to tell them is about disclosing information, about making sure that they have adequate cover, that they have not just company cover. So a lot of those things we need to tell them. And of course, tax benefits don't hurt. So they do then take advantage of the tax benefits. So at least for that much they're covered. A lot of clients that would earlier not take health insurance for parents because of saying it's expensive or something. So that those are also looking at covering their parents because they've seen how it can be.
I think most excuses stem from overconfidence and the fact that we don't want to think about things going wrong. It's like we prefer planning for the best without preparing for the worst. But it's good to see that COVID-19 has changed this to a certain extent. Having said that, insurance products are becoming more and more inclusive, with insurers trying to bridge the gap by covering outpatient medical expenses, dental treatments, mental illnesses, maternity expenses, and so on. Even motor and travel products are evolving. So Shweta, tell us, what other pain points can insurers address to ensure more people find value in buying insurance?
More ease would go a long way, because I think that is a pain point still, that when they go or into a hospital, or they need to check which hospitals are covered under my insurance, or which is the third party that I need to sort of administer, that I need to sort of consult. So I think the convenience is definitely one that is to still increase. That I still see a pain point. The other thing, I think dental needs to be covered a little more, because people do worry about that, and these are huge costs that we are seeing. Mm-hmm. So a lot of people find dental to be a big pain point. I don't think of anything else that they should sort of cover at the moment, but I think they have to sort of increase the coverage and make the whole process a little more easier.
Right.
The other thing I could think of is, making sure that there are small covers which are cheaper, that they can sort of add on. Because not everybody needs everything, right? You may give me a fancy policy which covers everything, but it may cost a bomb. But I may not need everything, depending on, say, my family history or my own history. I may need, say, more cover of one sort of
one specific condition.
Yes, one condition, or one, say, dental or whatever.
Well, I think that's definitely some food for thought for all insurers. Moving on, Shweta, I've heard you and many other financial planners stress on the fact that insurance is an important part of building a robust financial plan. So tell us, what approach should one take when it comes to buying insurance, both life as well as non-life?
So when one looks at their finances, I think insurance is the first thing that you look at, not the last, or not like a tax saving tool. I think it's the very first thing you look at, even if you don't have dependents. And usually what happens is, even if, like, when you're younger and you don't have any dependents, nobody is really counting on you for your sort of money, or counting on you to take care of expenses. That is when you can take insurance to be like the cheapest, at its cheapest, right? When you're young.
Right.
So it helps if we talk about insurance in a way that this is the first step. Okay, SIPs are great as a first step, but can we have like a pre-SIP routine where we talk about insurance, life and health? One of the reasons that also people like corporate jobs is because they are covered for at least health,
yeah.
Right? But if you're in a smaller company, if you're in a startup, if you're running your own business, if you started on your own, you don't have this cushion. You don't have something to fall back on in case something goes wrong. In fact, just with like a health insurance or life insurance policy in place, you can save yourself so much heart and so much trouble. I'll just give you an example here. So there was this businessman who in his early 40s was of decent health, not necessarily the best of health, but decent health, slightly obese. His own business. One afternoon he just fell. He had his daughter around, and he had a massive heart attack. Mm-hmm. His illness, his treatment, getting back to sort of normal, cost him not just his business and home at that time, but he literally went into loans, got into bankruptcy. He got to a bankruptcy stage because of just one afternoon. So when we all think that, things are great, and, nothing's going to happen to us, and we think that, even if something happens, it's, death is going to be the worst. It isn't. Something like this is even worse than death, right? Because you have to then deal with this. You have to get back your life right from the dumps. And this person actually commendably built his life back from there, from bankruptcy, and worked really, really hard through his late 30s, early 40s, all of that, right? So it took him almost 10, 12 years to get back at a decent stage, not even where he was. So just one cover would have saved him so much pain and so much heartache and so much humiliation. See, at the end of the day, once the pain and heartache goes, there is humiliation that you see, right? Because you're so much behind in life than what you yourself were. Not even compared to peers. Peers have even gone further, right? In late 40s, people are in the sort of prime of their careers. And here he was, where people in their early 20s are building their portfolios, right?
Right.
So it's a lot of that, a lot of mental trauma. All of that could have been avoided just with like a couple of decent covers on health and life. So that is why I talk about it so passionately, saying, you need that cushion to fall back on in case something goes wrong. And I think that sort of convinces people, saying, okay, because while we would like to believe that things are in control, they're not everything that is in our control, right?
I'm sure our listeners will have a lot to take away from the anecdote that you just shared. Life indeed is uncertain, and it's so important to be prepared because the impact could be huge, in some cases everlasting. I think it would be very interesting to know how you deal with people who show resistance when it comes to buying insurance. Tell us a little about it.
So I just talk about things that I've seen, and honestly that actually works, because people think that they know everything, and the reason that they're coming to me is to see a little more than what they've seen, right? So I talk about things that could go wrong. So my first step is, of course, talk about what they need, why they need it. So for example, whether it's life insurance, why do they need it, how much they need, what does it cost. So a lot of times logic sort of works, and my saying that in the cost benefit analysis says just take this and be peaceful, and who knows, just sleeping peacefully at night, you're going to not need any of this, right? So just by paying this, you're buying your peace of mind.
Right.
So this is the cost of your peace of mind. Are you ready to pay this? Say 25,000 a year. Are you ready to pay this? And more often than not, people are like, okay, fine. Like if you insist, sometimes they're not convinced, but they're like, okay, because you're saying I will take it, right? But when they see people around them, and it's usually resistance is because they've never spoken about this to anybody, right? So sometimes it says, okay, let's talk about this 3 months from now or 6 months from now. And see, for us, we're not in a rush to sort of sell anything, right? So that helps us saying, okay, this is what you need. It's good if you take now, but you have to take it at some point. Or if you decide to do this after a month, let's have this conversation again after a month.
Right.
And sort of once they hear this from you, they're opening their eyes and ears and see around what is happening in this sort of perspective, with a sort of different perspective, right? So that helps them as well, because they're like, okay, this costs them so much. So I was just talking to my friend who, and you said 25,000, and he was like, why aren't you just jumping at it? Because I spent like 10 lakhs or 5 lakhs or whatever at this place. And he's like, oh wow, okay. So just because you've initiated that conversation, their perspective is now different, and they talk to people about it. People who are not you, people who have seen, people who are friends, people who are colleagues. And because they started talking about it, they come to know so much more about it. In fact, I had somebody who tell me that because you initiated this insurance conversation, I actually spoke to somebody and they opened up about their sort of experience. And it was, while they did have insurance, it was so harrowing. Just the whole experience was so harrowing. So thank you. It helped me connect to them at a different level. So a lot of these resistances come because we've just not spoken about it. We're just not aware, or we just didn't think it was important. The other, of course, reason is when we just tell them about some of these incidents that we've seen, like I mentioned about the bankruptcy, like I mentioned about, this a friend of mine who was depending completely on the in-laws. So when I speak about some of these to them, and they connect to it as well, because they might be in similar situations, or they themselves can see somebody with a similar situation,
Right.
So then they're like, okay, you know what you're saying makes sense. So do you think this company is right? So then it moves to a more saying, okay, which company, how much premium? So there are different ways that clients come at it. So different ways, so not one single way that you talk to clients about it. But yes, at the end of the day, then they have to make sure that they pay that premium and make sure that you're signing them up for that insurance so that they're protected.
Makes sense. So Shweta, we are close to the end of this episode, but there are a few critical things that we would like to understand from you. From your experience of putting together financial plans, tell us by how much can a medical emergency set you back in the absence of adequate insurance?
Okay, so from a health insurance point of view, I can just think about 2 or 3 instances that have actually happened. So one of them was this couple where both of them had insurance from their companies, and both of them sort of decided to move their jobs at around the same time, maybe a month here and there. So one was between jobs and the other one sort of started their own business. So for a period of about 6-7 months, they had absolutely no health insurance because, they said, okay, we'll figure it out. This is given their sort of priority at that time, and this is almost 10 years ago, I think. And here they are thinking about what they should do in life, and the mother of the husband sort of falls and fractures her hip. And a huge medical cost, surgery, all of that happens, and they realize they have no health insurance. And one hasn't sort of worked for the last 6 months, so they're literally living off their savings. And the other one is started his own business, so again, eating into savings. So where 6 months ago they would have thought they're at a great place in life financially, now they're literally seeing that there's absolutely no cushion for us to fall back on. She ultimately, of course, started working with somebody else very soon after. But this whole surgery and the whole trauma sort of cost them close to, I think, 7 lakhs at that time, which is 10 years ago. So pretty much, and pretty much like 15 to 18 lakhs in today's value. Right. So I think that is something that people don't really think about, saying it could cost, what it could cost us, right? They think about what it is costing now, say that 25,000 or 30,000 premium. They don't think about what it could cost them. I think the minute you start thinking of what it could cost you, the whole perspective changes.
I want to actually sort of take this forward and focus a little more on health insurance, given that it has finally taken center stage. So for a family of 4, say 2 adults and 2 children with an annual income of 20 to 25 lakh, how much sum insured would you suggest?
So usually they do have company health insurance, but assuming that they don't have any, or what's the total that we're looking at. So I would recommend at least like a 15 lakh cover, like bare minimum 15 lakh cover that they should be looking at.
For the whole family?
For the whole family, yes. If they are not comfortable with just 15 lakhs, they could then top it up with another, say 10 lakhs, which is like a floater. And that is what we recommend to clients. If they, again, it's a cost-benefit ratio, right? So whatever they want, so we give them that option. But 15 lakhs is my sort of bare minimum that they should have so that they are absolutely comfortable, because something could happen to, say, all of them at the same time. And that is not something that they would want. Accidents happen, illnesses happen, COVID happen. So 15 lakhs is the bare minimum, and 10 lakh top-up is what we recommend as well.
And could you share any tips on how one can maximize their coverage at an affordable cost?
So that's exactly why we talk about breaking down the 25 lakh cover that I just spoke about. 15 lakhs is something that we recommend that they do like a individual policy. So depending on the age, of course, the premium varies, and the company, the premium varies.
Right.
But a 10 lakh top-up, which is a floater, can help them maximize the cover. So they're protected in case something happens to all of them as well. Right. And there is a floater that is maximizing that cover. Because if they otherwise take only like a floater, which is say 10 lakhs, they're not going to be adequately covered in case something happens to all of them. Because there will be limitations in terms of how much you can claim. Say for example in room rent or whatever the terms and conditions of the policy are, right? So if it's just a floater, that's not going to help. So that's why we recommend like a 15 lakh cover, which is individual, and then a 10 lakh top up.
Makes sense, absolutely. Shweta, thank you so much for giving us your time. Personally, there have been quite a few takeaways for me, and I think our listeners will have a lot to think about too.
Thank you for having me. It was a great conversation. Thanks.
Thank you all for tuning in. We'll be back soon with another interesting episode of Insuring India. Until then, take care and stay well.